Okay, you know the news by now. It's everywhere. Are home prices going up or down? Yeah, they're going down. Okay. All right. So the question isn't, are they going down? Because we all know they're going down right now. The question is, how much and how much longer will it continue to go down? So thank you for joining us here today on YouTube Live. We have a couple really good articles that are going to talk about maybe where this is going or where it's heading to. So you got to stay tuned. And we're going to wrap here about 15, maybe 20 minutes, and we'll get out of here. But there's some good news on the development side because there hasn't been much bad news. Now, bad news would consist of like a company going bankrupt or leaving, folding up shop and leaving town and going to another town to conduct business. That's not happening in Phoenix. In fact, it's just the opposite. So we're in this quandary right now where we know the medium term to long term of Phoenix overall compared to other cities across America is going to be really good. Okay. And so if it's going to be good in terms of the local economy, now there are other economies that are doing big things as well across America. Of course there are, but Phoenix is going to be in the top 5, no question about it. And if it's in the top 5, jobs will be created. People need to live somewhere. So is there a window of time, which I think there is right now, to jump in, buy a house, and hopefully get a good deal? Now, what constitutes a good deal? Well, that's the beauty and the eye of the beholder on that standpoint. But what constitutes a good deal? Is it how much you get off the price right now, or is it the negotiation of terms, or is it both? Well, hopefully it's both. I mean, when you work with us, it's both, guys. We just got someone under contract here recently on a resale home in which we were able to negotiate a 3-2-1 rate buy down, which costs upwards of $20,000, and we got $27,000 off the asking price in addition to that. So it was a good deal, in my opinion, given the marketplace where we currently stand. Now, someone's going to say, well, what if the price drops another $20,000 over the next 3, 4, 5 months? Is it that good a deal? Because maybe you could have got $27,000 off that $20,000 reduction for a total of $47,000 plus a 3-2-1 rate buy down. Maybe. I don't think it's probably going to happen, but maybe. You don't know. And that's that falling knife example I give all the time. Nobody wants to catch a falling knife. I was told a long time ago by an economist that everybody loves to buy and sell in a market that's appreciating. Buy and sell. But nobody wants to buy or sell in a market that is depreciating. Think about that, because we all are conditioned to think when the market's going up, sellers love it. When the market's going down, buyers love it. But they don't. Buyers don't love a market that's in decline unless there's a caveat, they can time the bottom. And nobody can time the bottom, but we all think we can. Guys, I've been selling real estate for 20 years. I rode the market down. I say down, I mean down in the Great Recession. Bottomed out in 2010. Okay, at least in the Phoenix area, 2010. And we're talking 70 to 80% value decline in some areas across the greater Phoenix area. This is nothing compared to what we're in today. But we all thought we were smart enough to time the bottom. And unfortunately, none of us are. I'm definitely not. But some of you guys are way smarter than me. But you're not good enough because no one can predict the future. So everyone loves to sell and buy when the market's going up because you feel good about it. You feel if you buy, the market's increasing, it will continue to increase because, trees grow to the heavens as always, right? They never stop. Well, that's wrong. And we know that it's cyclical on the up and the down. That's the important part to remember. So when do you jump in as a buyer to take advantage of these falling prices? That's a great question. Hey, we got some comments here. Hey, Michael Freeman, what's up, my man? That's a great deal. I think it's a great deal too. Thank you for saying that. Guys, and by the way, where are you watching from? If you don't mind putting your city, state in the comment, that'd be great. It just helps the algorithm kind of curate the content as best as possible on YouTube. And if you have a question, ask it. Someone else is asking it too, guys. I get a lot of comments after the fact on the replay, which is cool. Love that. But if you're watching live, ask a question. Let's see if we can solve a mystery, a puzzle here together today. I'm going to share my screen, and we're going to start off with a banger out of the gate here. Okay, I'll zoom in a little bit more for you guys here. Buyers, take note. Mortgage rates are falling. Home price growth is cooling and supply is outpacing demand. Now, you need to pay attention to this because this is actually very interesting because it's counterintuitive to what a lot of people are thinking right now. What I mean by that is this. Let me pop over here and show you where the 30-year fixed mortgage is right now, okay? Because it's pretty darn good. Guys, check it out. We are currently at today 6.58%. 6.58% as the stated 30-year fix. That is down from just a couple days at 6.75 and just a month ago, darn near 6.75, almost a 7 up here, right? So 6.58 is low. Matter of fact, if you go back to the article, it tells you that right now it's some of the lowest rates at 6.55 that we've seen in many, many months. Many months. Okay. But here's the part I want you to really take note on. Okay. This is interesting. Read this line right here. Serious homebuyers should consider taking this window of opportunity to act fast and lock in a mortgage rate at the lowest level we've seen since last October, said Chen Zhao, Redfin's head of economics research. But hold on. Keep paying attention. Here we go. Last week's soft jobs report ups the chances of the Fed cutting interest rates in September. So why in the world would he say lock in the rate right now if there's a soft jobs report that just came out and the Fed's probably going to cut rates further in September? Oh, he's just trying to sell real estate, right? He's just a guy who works for, a real estate company that wants people to buy, so he's going to say that stuff. No, that's not the case. Because if I go back to the article and we look at it and digest it real quick, here's what he says as the next sentence. The market's anticipation of that cut has already pushed mortgage rates down, and there's no guarantee they'll fall further. There's a chance that mortgage rates could fluctuate when more economic data is released in the coming weeks. You guys catch that? So you guys understand, Jerome Powell, the Fed chair, speaks and says, okay, rate's going to come down a quarter point or whatever. And we all go sit there and go, yes, finally. And we sit there and watch the ticker, the 10-year bond, right? And we go, why aren't they moving? Why aren't they going down? Well, because they're already down. The market prices and bakes in this information on the anticipation of the odds that the Fed will act a certain way. And everyone's betting that for sure, because this week jobs report that the Fed's going to reduce the interest rates. And so right now, that's why you're seeing 6.55, 6.58, which is a half point lower than where we were just a couple months ago. That's really good news if you want to buy a house. So he's saying lock it because you just don't know what's going to happen with some volatile, news that could come out over the next couple of weeks. What do you think about that? Would you lock right now? Or would you let this ride and just, be the riverboat gambler and shoot for that 7 or 11 on the out roll, right? I mean, I don't know. That's up to you to decide. But there's some wisdom in what he's saying is my point. Let's look at another article, okay? Article right here from The Economist. That's a, site I don't pull up very often, okay? America's housing market is shuddering. For this country's homeowners, the good times are coming to an end. All right, well, if that's the case, I might as well wait a little longer, right? If you believe what this guy's saying, then yes, you should, okay? Time that bottom as best you can, but just don't miss it. That's my point, okay? Few pandemic-era bets will have paid off quite as nicely as nabbing a house in a boomtown such as Atlanta, Austin, or Miami, or Phoenix, with a 2-point-something% mortgage rate and holding on as values soared in the subsequent years. Now, what he goes on to say is that there are a lot of, see the red dots here in the South, not doing so well. Some of the blue dots are doing better in terms of growth of appreciation, okay? And he talks about the going down in Sun Belt states because we had so much population growth that right now we're seeing actually net domestic migration slow down in some of these states in the Sun Belt, Florida, Georgia, Texas being the three right here, right? They're still positive, but they're not as positive in terms of the numbers as they were a couple years ago. Now, New York is still negative. California is still negative. They're losing people, but they're not gaining, but they're losing people at a slower tick. So that's interesting, right? But he's just saying overall in this Economist that he thinks these good times of people just, buying a house and watching it just go is over. And that right now he thinks that you're looking at a reduction of a overall appreciation of about 1 to 3%. Okay. Now he also publishes this zip code map. This is kind of cool, guys. This gives you a visual representation of where it's good and where it's not so good. And guys, you see the black down here in the little legend, if you will, shows -2% on the appreciation for all these zip codes, over 26,000 zip codes across America. The blue is positive. So you have some in the Rust Belt, man, you have some appreciation happening right now. It's funny, I talked to a client yesterday in Chicago, and they said, man, we were looking at getting a house, and it's like $2 million. So not like it's a super affordable home for most people. $2 million in Chicago, and they had multiple offers, and it went for $75,000 over asking in Chicago in the suburbs. And you look at this map, and boy, he's not lying. Look at this, dark blue. So for other reasons, Chicago is maybe a little undervalued over the past couple of years, ever since COVID. And people are finding the value in it now, as well as the Rust Belt. Now, Northeast too, and some of the central part of America. But you look over in the Southwest or in the Sun Belt, Southeast, right here, not so good. Florida, Atlanta, Texas, okay? And even in Phoenix. We go to Phoenix here, we'll zoom in. There's one bright spot for Phoenix on this, and that would be Paradise Valley, guys. If you go in a little bit more, if I get my computer here to cooperate, you can see a blue dot right in the middle, right? Oops, let me zoom over here. Stay with me. Right in the middle, that's PV. Okay, that's a zip code of 85253, and everything else is not blue, for lack of a better way to put it. Okay, so there you go with the appreciation. Now, does that match up with the Cronf report? And it does. Look at the monthly sales numbers on the median. On the median, you're at 442 right now as of August this year. Guys, we were just at 445 this last month. We're now at 442. It's going the wrong direction. But if you look at it in perspective, you have to look at everything in perspective, guys. We were here September 24, darn near close, July 24. We were there in January 24 and most of 23. We were below that number in 23. So we had a nice little run in 24 overall and in 25, guys. So not bad, okay, in terms of the median price point. Then obviously 22, we got hammered. In early 23 and 22, we got hammered after the incredible run we had from February 21. Look at this, guys, 340 all the way up to 480. That is too quick, too fast, and that's why you saw a correction here. And then we've been kind of bouncing around ever since. Now it's the average. Or the median? What's the average say? Average says 515, 809. Okay, in Maricopa County. Average price per square foot, $280 a foot right now, and that's not going in the right direction either. So it's all matching up, okay? It's all matching up. Now, if I look over here, here's what I'm watching too. Look at pending listings. Well, before I go there, look at sales per month. We're down, right? We're at 6,900 last quarter. We're at 6,700 last month. We're at 5,400, guys, and I'm telling you right now, 5,400 in the beginning of August, not bad. I anticipate that number to be in the, we're at 5,400. It's going to be in the fours for sure. My prediction this time next month, because August is the slowest month, because July is the slowest month for activity. August is typically the slowest month for closings. That's the seasonality of the market. Throw in some people waiting, demand being low, rates not coming down a ton yet, and you're going to see in the fours for sure. But September, October start to increase a little bit when it comes to monthly sales. Now, what I'm also watching is the pending listings, okay? But look at this, guys. We're at 5,072 last quarter right here, okay? And now last month, we were at 4,200. Big drop, right? For pending. Because why? July is the slowest month for activity. People looking at houses, right? Contracts. We're already up this month at 4,580. So that's a lead measure going towards a lag measure, right? So that's a good thing. It's going in the right direction in terms of people writing offers and buying homes. So that's all good stuff, okay? Now, if I come over here, I'm going to show you the overall Cronf Market Index at 75. It's going in the right direction. And why is it 75 and going in a better direction than what it was? It's because you have a situation where demand is about flatline, but it's still low. You have less homes coming on the market right now because of the time of the year. That's not meaning the market's going in the right direction necessarily, okay? Because it's supply and demand. What's going to happen is in September, October, we're going to start seeing more active listings coming on the market. And if demand stays flatline, which it very well could, we're going to be showing a Cronf Market Index that probably will start ticking down, going towards 74, 75, 372, okay? But right now, it looks, not terribly shabby because you have that Cromford Market Index saying what it's saying. Look at all this green here. Look at that. Okay. For your city. Look at that. Okay. Now, I have this highlighted because this is what it comes down to at the end of the day, right? Are you a home buyer, potentially, or a home seller, potentially? Check it out. All this data, what's it mean for home buyers? The shift creates opportunities for those with stable jobs. Opportunity, stable job, affordable, monthly payment you can make. More inventory, motivated sellers means better negotiating power and potentially lower prices. Those registered with home builders receive regular emails with incentives to purchase, right? An opportunity. Take advantage if you can, right? Home sellers, the days of quick sales at a high asking price have ended in most markets. Realistic pricing and patience will be essential. Entry-level home sellers must meet the payment requirements for first-time home buyers. Move-up and luxury home sellers must consider their buyers' needs ahead of their own in order to sell their current home. Interesting. So what do you guys think about that? Okay. Have sellers completely woken up yet and said, okay, now I get it. I want to sell my house. Here's what I got to do. I got to face the music and I got to get my home marked in line price-wise with where the market is. And like the old Wayne Gretzky quote, right? It's a skate to where the puck is going, not to where it currently is. And for home sellers, that's the best piece of advice I can give you right now. Skate to where the puck is going. And if you don't have to be a rocket science to figure out, it's going ever so slowly, right? It's not falling off a cliff here. It's going towards the wrong direction in terms of appreciation. So jump ahead of it. Get people, 5,000, 6,000 people looking to buy, get them enticed to purchase your property. Okay. Now I'm going to share a couple articles and we'll be done here and get you guys your day back. But we have some cool things here. First and foremost, this is cool right here, guys. Check this out. Okay. New law aims to stamp out one growing headache for home buyers. Trigger leads. You guys know what this is? Okay. So when you buy a home, you get your credit pulled if you're getting financing. And did you know that automatically the credit bureaus, who are private companies, can now sell your data to anybody who wants it? Okay. So that's why you get those calls after you get an application done for a mortgage of, hey, do you want to refi? Hey, do you want to use my company? Hey, we have the best rates possible. Hey, and it's annoying, right? Well, no longer can they do that because of the Home Buyers Privacy Protection Act. It now curbs trigger leads in mortgage applications. That takes effect 180 days after the president signs it. So that is good because you no longer will hopefully have to receive those annoying phone calls because everyone's selling your phone number across the board. Okay. That's number one. Now check this out. Apple. Here we go, baby. More investment. Apple to invest billions in Amcor's Peoria facility as part of a $100 billion U.S. manufacturing commitment, guys. So there's Amcor, the new facility they're breaking ground on in September of this year. This is going to be the largest advanced semiconductor chip packaging company. Okay. And it's manufacturing right here in the Arizona Peoria area, right next to TSMC out there in that northwest part of the valley. Okay. But TSMC is already making chips now for Apple, which is really cool. Okay. They started making them earlier this year. And Apple is throwing in a $100 billion investment to have the manufacturing come back here to Amcor and basically home to the United States of America. Now, they avoided a huge tariff of 25% because they are bringing the manufacturing back to America, and it is going to create all kinds of jobs. Now, people who don't agree with this necessarily are saying it's going to take too long. It's going to take too long to get these manufacturing jobs up and running, and therefore it's going to be more expensive to the U.S. consumer, and therefore the economic, the economy and the buying power of all the Americans will stall. Possible. It's always possible, but bringing back U.S. manufacturing jobs is not just good for the overall economy in terms of Americans being put back to work in manufacturing here. It's also good for our global security because, guys, we saw what happened in the pandemic. Man, 90% of the ibuprofen is manufactured in China. That's just one of a million things. So getting some of this back in the U.S., maybe not all of it, but some of at least the more important stuff, like things that run all of our daily lives, like chips for your devices, probably not a bad idea. So anyways, that is good stuff. And then a couple more here, guys, and we'll rock and roll. Okay. This is cool. We won't go in depth on this, but guys, Inc. 5000, Arizona's fastest growing firm, spans 24 industries and employs over 17,000 people, guys. But check this out. Okay. Arizona's 137, okay, Inc. out of 5,000 companies span 24 industries, employing 17,829 people, guys. We have a lot of companies, in other words, on that list, which is great because, guys, I started selling real estate here 20 years ago. And believe me, it wasn't like that. We were known for real estate, construction, tourism, and overall, basically just a service-based industry economy. Now we have diversity in our economy. We have high-paying tech jobs, healthcare, finance, fintech. It's pretty cool. And that helps our job growth in the future in our housing industry overall. Okay. And then a couple more, guys, your rent. Okay. We'll get more space in Phoenix. Okay. For $1,500, if you're going to pay that, Rent Cafe found that Phoenix is a pretty decent value overall. But here's the list right here. Let's get right to the point. Tucson has the most at $899. Phoenix at $817. Scottsdale the worst in the 10 out of 10 at $692. So what that means, if you're going to pay $1,500 a month in rent, that's the square footage you can expect to get on whatever type of property you want to live in. Take a look at that. Okay. Now read and weep, or read and be sad, or read and be happy. Or maybe this will say, hey, screw that. I'm going to go buy and just get in the game because rates are low. I'm going to lock it in now and I'll hold this sucker for a long time because I know in the long run, real estate appreciates and I will win. Okay. But enough on that. A couple more things here, guys. Century Communities opens first model homes in the massive Teravalis development out in Buckeye, guys. 37,000 homes on this Howard Hughes development. 37,000 homes, guys. That's bigger than most cities across America. All right. That's huge because Buckeye is the second largest city in the Phoenix area when it comes to land size, behind Phoenix, of course. Okay. So that's pretty cool. And that is rock and rolling. They have their approval for all their water. Got all the political contractual issues out of the way for the water, and they are rocking and rolling out way out in Buckeye, west of the White Tank Mountains, guys. And I'm going to end you with this article because it's pretty cool. Now, I'm a Nebraska fan. Okay, I play football in Nebraska. I'm a huge Husker fan, but I'm a ASU fan too, if they're not playing each other. Okay. And Coach Kenny Dillingham is a client of mine and a good friend and a great guy and a phenomenal coach, obviously. And check this out, guys. This is when you know you're making a ton of momentum on your football program. And by the way, ASU is ranked number 11 preseason poll. That is fantastic. Okay. But Send Devil Boosters raise money in days for a state-of-the-art new ASU football facility, i.e. their weight room. They were 16 out of 16 for all the teams in the Big 12 when it comes to the weight room. So they raised over $1 million, and they now are jumping in to build a brand new weight room for the football team. This is awesome for the university. This is awesome for Coach Kenny Dillingham. Great job, Coach. We all love you, and we are rooting hard for you to go to the CFP again this year. And guys, go out and support ASU, man. Go to a game. Let's sell the stadium out. All the games if we can. I will definitely be there in support because I just love college football, and it's right around the corner, guys. College football starts in like 2 weeks. This is a phenomenal time of the year. Any questions? Put them in the replay. Call me 480-660-5974, and I would be happy to answer any questions you have. Don't be shy. Reach out. I love to jam and talk about real estate and everything related to Phoenix. That's the name of the YouTube channel. Okay. Phoenix, until next Tuesday, 4 p.m. local, keep it classy.